This is how you trade every hour by using your hourly candles. And this will allow you to master the 1 hour time frame and trade with precision every single morning. What you'll specifically learn in this video is for 1 hour exact timings I use specifically to trade every single hour in my mornings by using our hourly macros, where we look at the price movements 10 minutes before the start of the hour and 10 minutes after the start of the hour. Also, be delving into our candle impulse theory, which allows us to trade during the more impulsive market and natured. We allows us to trade during the more impulsive markets. We then go into our tap and go PCE strategy, where we focus on, as I said, the retracement into the 50%, and then we look to trade up with the new oncoming impulse. We then combine the macros with the PC and PCE for high probability trades and finding precise entries for every single hour. And now we have a whole entire trading plan allowing you to trade with consistency for every single hour. And then as well to end off data proven results through historical batch results showing the effectiveness of this specific strategy, as well as the live traders example that I've taken throughout this week, as well as more that our team and students have taken. Our sponsor Zeek Fund is an educational platform that provides prop trading services, and they have partnered with private equity firms to provide traders with authentic trading capital, meaning that once you do get your account, you're trading with real-time live market data. And this is the only way that they're able to provide you with lightning fast payouts on an average of just 3 hours. Also allowing you to get instant refunds once you do pass your evaluation. There's zero restrictions on your trading strategy. Even if you trade during the news or in high frequency markets, they allow any trading style. They also allow and provide a clear and fair payout system, meaning once you hit your profit target, they're not going to restrict you on your lot size or your IP address. They allow you to get accounts all the way from $5,000 and scaled away to $400,000 and allow payout splits of 90%. Zeek Fund is a prop firm that I trust, and you can sign up with the link in the description to get started today. Now, the first thing you have to understand is you want to understand the market condition currently, okay? If you're in a positive nature, you'll be using your CIT models, and if you're more ranging market, you'll be using more of your CRT candle range models. Now, going over our candle impulse theory, we've already gone through this through numerous videos, so I'll briefly go over it. We're going to focus on the candle closure of our bullish candles. If price closes above the previous candle high, there's a high chance the next candle will look to exceed the high of the following candle to continue the trend of impulses. The focus of the candle impulse theory is the close of the previous candle, and we'll be using a variation of this model for our hourly close. Example of this is if we were to be trading in the New York AM session, 9 AM would be around the New York Open, and that would be our 9 AM hourly candle open right at this low point of here. It then closes at 9:59. We start off the new candle at 10 AM, starting off the new price movement for the hour. Now, what's very interesting is that if we look at the lower time movements, we see that price follows this simple candle anatomy: a consolidation to start the opening of the candle, a manipulation to make the major sweep, and then lastly the distribution, which is where all the major volatility is happening within that hour. Price then starts to exhaust to then start off the next cycle of this. We start off once again with a new accumulation, manipulation, distribution model that you guys are more understanding as our power of 4 model, okay? Accumulation, manipulation, distribution, and then lastly exhaust, okay? Your goal in trading this exact model is to look for entries around that manipulation area where price is then going, for a bullet example, going below your previous candle close. This is the previous candle, this way close off, and then this is where we start with the new candle with a little consolidation. And as soon as just below there, that is the ideal area for you to for a buy to trade up the current hour candle, okay? As you can see right there, 9:59, that's when the new candle starts. 10 o'clock candle opens right over there, and you want to trade that. Now, going once again, the simple schematic of it is, for example, you want to buy below the previous candle close, and for bear example, you want to sell above the previous candle close. Now, this is a example between your lower time frame and your higher time frame 1 hour candles, okay? Following each hour, 10 o'clock, 11 o'clock, 12, and moving on to 1 p.m., there's a key difference. There's a key common occurrence. The close of your previous candle, here's the close of your previous candle, which is 10 o'clock candle. 11 o'clock is your current candle, and you see what price does is that it returns to that candle close price. And not only that, we see that price starts to retrace into the body of the candle. The key difference is that we want to look for the little retracements into the body of the candle so we can take advantage of the distribution of the current candle. Another example of this here is where your current 11 o'clock closes, okay? This is where your current 11 o'clock then closes off at this candle, then the 12 o'clock starts right over there. You can see that price does one simple thing. Once it starts to make up that wick, it is playing within the closing price, okay? Close, retrace, impulse, okay? And you see this still keeps on getting revisited. Close, retrace, impulse, close, retrace, impulse. Then once again, close, push up a bit, retraces, and then starts to distribute, okay? You can see the key understand that we can use that retracement as our common entry point for all of these newfound hourly distributions, okay? Now, for our second model of candle impulse theory is our tap and go. We make a main focus of the PCE, which stands for previous candle equilibrium. The tap and go model focuses on the equilibrium level of the previous candle. This concept makes use of understanding the premium and discount pricings. For a bearish move, the new candle will make a retracement into the 25 to the 30% range of your previous candle. This would be the exact movement for a bearish example right here. As you can right over here, your bearish candle is right here. There is the 100%, 25, and 0%. Okay, we're looking for this area between the 25 to 50%. Okay, just what I call the low quarter of that candle to be revisited as the previous candle closes. New one opens, wick revisits this exact area and then starts to distribute lower. Okay, now this usual level leaves over a large standing wick, and the entry is done by using either the AMD or total models once the new candle reaches the previous candle equilibrium on the lower time frame. Okay, now here's a higher time frame schematic to lower time schematic. Here's the previous candle. It creates this range high to low point. Then you can now clearly see that this is all a simple impulse to retracement model. Price impulses and traces to that 50%, which is obviously our discount pricing, which is obviously our premium pricing. And then when price does this, it then starts to distribute that candle lower, moving down, leaving that last standing wick. Okay, here's the previous higher time candle, and there's your new candle, okay, that you are currently trading. The first model I want to take into consideration is our stop and go model, where these highs and low points are used as high time withdrawal liquidities. If you have an impulse in candle, price then stops on the next hour, expect the next hour look to continue and go and target this high point. Okay, this is seen as what I call a little pause in price, so you'd understand this as the impulse, retracement, and impulse. Okay, right? This falls into the impulsive nature of our market. Okay, now once again, we're going to apply that same understanding to our hourly candles in relation to our lower time frame movements. Okay, so make a major focus on this 11 o'clock hourly candle. We see that it has our 0, 25, 50%, and 75. Okay, obviously, since it's a bullet example, we want to focus on the upper quarter of this candle, which range from the 50 to the 100. And can see the price comes to the 25%. And with this, we can see that once price retraces into this area, that would be the ideal area for you to even go even lower to see a more refined entry. Okay, here we just use a normal tilt entry as price took out these certain lows with this little wick over here, and that's what we need to have for us to validate this as a liquidity sweep and then see price distribute higher. You can see as price distributes, even go past that 12 o'clock candle, okay, as it follows through to the 1 o'clock too. Okay, so you then start to realize you can actually scale a lot of these movements into further hours of the day. Now let's actually start to refine our understanding to more specific timings, and we'll be focusing on our hourly macros. Okay, now this is 10 minutes before and after the hours are considered your macros for liquidity sweeps. Okay, there's often a super liquidity before a new candle opens, and sets itself up for the next move. Okay, the 10 minutes before your hour, that being the 50-minute to the 59, there are liquidity pools which are targeted before the new candle fully forms. And then 10 minutes after that, which is your on the dot hour to 10 minutes after that, is that the true move often starts forming, where if a liquidity grab occurred before the hour, a strong reaction follows. Now, this is a example of this. You can see from 8:58 to 9:20, we have this little range where we see that there is, for one, liquidity sweeps, okay, within this area. For one, we see that price also similar to our candle range theory, where we have price sweeps the range low and then starts to target the range high. Okay, still use that same understanding. Okay, but using our main, still use that same understanding. Okay, but using our main, kill zone from 9:50 to 10 o'clock, which is where we natively trade the no legacy, we see a few things happening. Okay, firstly, there's a major spike in volatility, but not only that, we see that price seeks liquidity zones, which is this low right here. In this example, it's right here at 3:50, we see what price does. It sweeps our liquidity, and then once again at 4:10, we see price just before that. Okay, we can see at 1:50, price does a major liquidity sweep, coming into our new candle opening. Okay, coming into our candle closing, and then at 2:10, we see that actually at 2:05, most specifically, we see there is a major liquidity sweep where price sweeps out this low and then starts to distribute higher. Okay, here's the balanced relationship between sweeping our liquidity and setting itself up for the next move. Okay, price sweeps liquidity, then getting away that bearish and bullish intention, and then price starts to set itself up for the new bullish move to move up higher with this last liquidity sweep around that 210 macro. Okay, now how does this come in relation with our hourly candle anatomy? Firstly, we see that retracement into the 0.25 level. Okay, not only that, there's also total soup, so it's also very good for our lower time intervals. Okay, so seeing this in confluence with a macro time of 150, that is a surefire way to look for a very good setup. Okay, and then obviously looking to trade up as price starts to distribute higher. Here's a little chart of our main hourly macros. 2 a.m. your macro would be 1:50 a.m. to 2:10. Okay, 8 a.m. to 7:50 to 8:10, 10 o'clock to 9:50, 9:10. And then 2 p.m. that's 1:50, and then that's also 2:10. Okay, right. Following this, okay, we can see that there's just a sort of deviation between the lower quartile and the upper quartile. Okay, 1:50 being the lower quartile, and then 2:10 being the upper quartile. Now, here's your hourly trade plan. First one, identify your hourly macro windows. Observe the liquidity sweeps in the last 10 minutes of the hour. Then you want to apply the candle impulse theory. If the hourly candle closes above the previous high, anticipate a bullish continuation, and if it closes below the previous low, anticipate a bearish continuation. Okay, you want to then look for confirmations in the first 10 minutes of that hour to look for your lower time for entry models. Okay, and then using the PCE confirmation, you want to mark the candle's equilibrium, also including the 25% to get your main candle quartiles. You want to then wait for retracement, and price should tap into this level in the first 10 minutes of your new hour, and it should show you an AMD or total soup, which will be your entry trigger. Okay, last, you want to enter with a bit more confidence. You can use your kill zones. The exact kill zones we use when we trade our candle mechanics is from obviously 9 a.m. to 11 a.m. Okay, you then want to also use any other order blocks or fair values you would have learned from your more PDA analysis, and this just helps for a bit more precision in your biases. Now, lastly, obviously, you want to set your stop loss below any other liquidity zones to avoid premature stop outs, and then obviously want to target liquidity pools for better objective pricing. Okay, now coming to the second part of our candle mechanics, we just gone over what we want to use in impulsive nature markets. When we go into more ranging markets, which is obviously a byfactor of trading the market, you want to then make use of your candle range theory, and this is the key to predicting every single hourly candle. The simple bias of it is that your previous candle high and low point acts as pivot points. If price takes a high, it will pivot and then trade towards the lows. If price takes a low, it will pivot and then trade towards the highs. Now, coming to our first shorty schematic, it is our sweep and go, where price takes out both the high and low of the previous candle. Also understand that if price does this with a wick more on the lower side and more bullishness on the high side, understand this is going to follow bullish nature, meaning that the next candle will also look to continue bullishly. Okay, Now, this is a combination of both your CRT and your CIT, since you use a sweep as liquidity and then use a CIT as a continuation. Price retraces into the 25 to 40% range of our previous candle, and then this is used to then distribute higher, okay? You can also just overlay this to make sure it says hourly CRT and then hourly CIT, okay? Or just cover up full, okay? Or like white rectangle or something. Okay, making sure to understand that price candle took the liquidity, allowing for more volatility. Let's take another example that we previously used, but it still vividly explains what we look for. Price closes, retraces, impulse, okay? Price closes, retraces, impulse, okay? Price closes, retraces, ideal buyer entry, and then distributes, okay? Price closes, retraces, ideal buying zone, okay? And then you want to trade the distribution, okay? Once again, price closes, does a bit of accumulation, manipulates lower. With the distribution, you want to be part of that and trade up high, okay? The same understanding we take here is the same understanding we'll be using on the hourly candles, okay? So coming into the start of our first example over here, firstly, this is our 1 hour candle overlay. So that is the 6 o'clock candle, and this is the 7 o'clock candle. Right here, just looking at the heights from hourly candles, we can see that there's a clear movement that is showing us bearish price action, okay? Had one indecisive candle followed by a nice impulsive bearish candle, okay? So just within that description, we understand this is mostly going to be a CIT play, okay? Our candle impulse play. So what we do with that, then we take out our Gann box here. And for everyone asks about the Gann box, use it set it to 0.25, 0.5%, and then 0.75, okay? Target all these levels. And now you can actually see that the way I draw this is using this current candle, okay, at 7 o'clock. There is the high point, right? And here we also have the current low, okay? Quick look into the settings for this. So you can see right there, 0, 25, 0.5, and then 75 with the 1, okay? So the 25 and the 50 are blue, okay? That is our main zones we're looking for price to retrace into, okay? Now you can see the price already gave us a very good retracement because it came into that major zone, which was our 25 to 50% area, okay? The prime ideal area where you want your new hourly candle, okay, total wick into. So right now we are currently creating that low wick of the hourly candle. You see that price is making a little turtle soup of this candle. However, as well, we do also have a change in state delivery, okay? Right now, this is a very good looking setup, okay, for us to trade down lower. The last thing that we look at is our macro. This macro goes from the 850 towards the 910, okay? That's also within our major New York time, okay? So it's wonderful for this. And then we'll just place in a sell right here, stops above the high. And now you can target all the way down with your TPs, but I have a very refined way of using my targets, and I explain this to all my students. We take our Fibonacci from the low towards the high, okay, since there's a bear scenario, and this will show us our Fibonacci extensions. We're going to target the 2.145, okay? Wonderful. Placing your sell, okay? And then now you're just going to let the trade play out, yeah? Okay, lovely. Now you get a very good move to the downside, okay? Now, if you actually look at our candlestick, you can see what happens right here. This is the current hourly candle that we traded, and you can see that this trade actually lasted about, there we go, 12 minutes, okay? So very nice trade of the hour there. And we look at our wick area from right here. Here's the opening of that hourly candle. It's right there towards the high, okay? And now all the students that do end up studying very well, you would also recognize this as our AMD model in the context that this start of the candle was accumulating with these low volume candles, price and manipulated as it started the retracement, and then this is the distribution, okay? And right over here, we're going to get that exhaustion, which happens right over here as price starts to retrace back up, okay, to the lower end of the wick. So right there, 1, 2, 3, power of 4, okay? So now let's look at another example that we took this week. Now with the next example here, this is a ranging market condition. So as this is also a ranging market, so this one is a ranging market condition. So here we'll be making use of our candle range theory. Actually, let me just click. So this example uses a ranging condition of the market, which means that we'll be making use of our candle range theory hourly schematic, okay? So we're mainly focusing on our hourly candle highs and lows. Now we have all our macros placed out perfectly here. And if you actually pay close attention, you notice that different macros are also used as sweeping functions, meaning if price sweeps one side of it, it would then start to extend towards the next side, okay? Right? Well as this one, we just took out this side. So this is also another draw on liquidity, which is very important to note. As well as our next NYM3, which is another macro, which is from 1050 to 1110. That one gets swept. And what does price do? It comes to take out that AM3 highs, okay? Now this is our macros. Looking into our hourly candle schematics, here is the 1 hour range formation. So just taking from this low point, just dragging it out there, you can see that it marks out this low as our hourly low there, and then this as our hourly high, okay? Right? What happens is we now fully have a range. So as price swept this low, price will then start to pivot towards the highs, okay? Now I also noticed this. I was also looking closely at my macros and I realized that at this time it was 1250, okay? So that means that my next macro would last from 1250 to 110, okay? So I'm looking to sort of ideal entries will be around within this area, okay? I want to see if the price does create a break above this high of some sort, okay? So I like that movement over there, okay? Now we also use our Nova CRT checklist. What do we have currently? We do have a CRT sweep. Do we have a liquidation model? Yes, because price just currently took out a few of the lows right over here, okay? And actually notice that price came to take out this little trend line over here. Okay, and you can see that for our liquidation models, price took out this. So this is a little turtle soup, okay? That's our favorite entry models. Now, once you fully have that, that's all we need to enter our trade. We're entering a macro time frame, okay? So we can expect also volatility within here, okay? Lastly, with our targets, the same thing that I used previously. I take price from the recent high all the way to the lows for a bullish setup, okay? And then I target this as my high point, the 1.27, and then we let our stop loss run around over here, okay? And here's a screenshot of the trade being sent out also to the Discord, okay? Now once I had all that, last week to check off on our checklist here. So you can see CRT sweep checked out, liquidation model has been checked out too. We had a quick return, so price swept and then returned back into the 1 hour range. And then lastly, we also had a change in state as well as our no liquidity against us. So there you go. 1, 2, 3, 4, 5 check marks. Okay. Actually 1, 2, 3, 4 check marks. That is all we need for our entry. Now I can fully enter this trade. Okay. So placing around here. So about $1,000 for that trade. Then we just let it play out. And you can see as you start the first macro, we start to push up higher the end price. And there you go. Now, as you're looking at the candlesticks, what was going on? Price was distributing, okay? So from the entire point all the way there, you traded this 1 hour candle, okay? Wanted a bit more out of that trade, so that's why we listed chinned on for a bit longer to get a bit more profits, which is not really a bad thing, but you can see right around there, 1 hour 10, we already reached a good amount of profit there. Then that fully trade about an hour and a half, okay? Lovely trade, 1 hour candle mechanics, okay? And you can see right here, we use the hourly candle. We use the previous hourly candles low as our sweep and the previous candles and the previous hourly candles high as our target, okay? Now let's look at one more example. Now this example was done during a major high folder news day, which was FOMC. And I'll show you the 2 entries that we got within that day, okay? Using our 1 candle an hour mastery, okay? Now this example, it was a variation of both the previous hourly candles low and high, as well as using the hourly candles close, okay? So you can actually, our hourly candle close was right over here. Actually dragging it right there. So actually this area right over here, okay? So now, to do this, we are looking for firstly, how do price react to the macro? So once again, this macro for the 9 a.m., for the NYAM1, we had a sweep of the highs towards the lows, okay? And then once again, pivoted towards the highs, okay, which is very good. Wins we following a bullish price action, okay? Also, just about 850 to 910, okay? Now, this one is 948, so it's about to be 950, okay? And we want to trade towards the 9, okay, I mean the 1010s. So right here, right around there, okay? So we want to be in this little hour range, okay? That hourly with our entries, okay? So firstly, we have a very good change in state of delivery, right? We have price rebalancing off a breaker block as well. Now, that's everything we need. And then I alerted on the live stream that this is going to be a good area to enter at. Stops just a few pips below that breaker area, okay? And then exact thing, we took from the highest point towards the lowest point there with our Fibonacci. Okay. And if you guys want these exact areas, you can find them in the Discord, or you can book a free one-on-one coaching call with me and my team. And we will also get you set up in terms of learning how we set up our checklist as well as our targets, okay, that we use every single morning. Now, this is already really good hourly mechanics, placing a buy there. Now, this was the first entry, stop loss there, okay. Then now is the price play out. So you can see we just start off the NYAM2, which is our 950 to, okay, you can see it's already a major price volatility within there. Okay, you can see it there. So that right there already brought us enough price movement, okay, from Tencent, okay. And you can see where does price start to reject from? The 1.7 deviation, okay. However, as we said, in this case, we're extremely patient because we knew that it was FOMC day, so we wanted to actually get a bit more out of the trade, okay. So he did a bit of a retracement, and we didn't play around with our TPs or break-even points or anything like that. We just let price do its thing. And you can see with AM3, and what time was this one? At 10:50 to 11:10. That's when price started to do the major reversal back up, okay. So this was entry 1. This was also entry 2 right over there, okay. Right at the to our max deviation, just in time for NY lunch. And if you're looking at the candlesticks of our 1 hour, what were they doing? They were all following that mechanics, okay. Bullish candle, stop, okay. Impulse, stop price, and then another impulse, okay. So there you go. That is how we get a trade every single hour. And this is how you guys can also apply it to your own trading. If you guys, as I said, want to get more clarification on this, book a free coaching call with us. Or even better, you can sign up for our free 5-day free, or you can sign up for our, or you can get access to our free 5-step to becoming a profitable trader course, which is also within the link in the description. Okay. And now that you guys understand how to get a trade every single hour, you guys can also watch our other video on mastering a daily time frame so you can trade one candle a day and master your daily buys.